Hello traders everywhere, Adam Hewison here, president of INO.com and co-creator of MarketClub with your video market update for Monday the 11th of March. So we have problems in Europe and that raises the specter of global uncertainty. The riots in Spain over the weekend led to the general uncertainty that's going on in Europe. Spain has a 26% unemployment rate, which is not good, and of course you have a lot of political unrest when that occurs. You also have Italy being downgraded by Fitch to BBB status, which is not good, and I think the election results have left Italy in a vacuum. We're going to be looking at regular markets, plus we're looking at 4 different stocks that are on the move that gave signals, plus a bonus one that just came up, which I'll be sharing with you in just a moment. So let's get started with our portfolio manager, and you can see right away that our trade triangles are green, 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 and red for gold. So let's start with the S&P 500. If you remember, we were looking for this is a weekly chart, a daily chart rather, but if you remember, we were looking for the 1550 to 1560 area. We're certainly in that zone now, so we've achieved some nice profits in this position. Let's just scope this out just a little further, maybe 6 months. You can see the trend continues up. And I think we could probably see this market even go a little bit higher given the momentum that we're seeing generally in the space. You're also seeing the Fed spending $4.25 billion every trading day. So that's not a negative for this market. And providing that continues, then you're going to see this market continue to improve from current levels. So moving on to the next market, and that's going to be the Dow. Now, the Dow has been a real leader. If we put our monthly trade triangles, you can see just kicked in right here, 13,661. We've almost 800 points in this position. We're looking for this market to go to 14,600, possibly even 15,000, which would be a big handle for it to cover right now. But again, the momentum and the general appearance for the market tends to be positive. I think there's a lot of people who are not in this market who are getting very, very antsy. But remember, we've been up. This is going to be the 7th day in a row we've been up. Now, no markets tend to go up forever. And like here, you had 1, 2, 3, 4, 5, 6. Then a pullback, boom, boom, boom. But I think this is maybe the scenario we're going to see a move up, maybe a couple of days down, but then sideways. So moving on to the next market, this is the NASDAQ. Now, the NASDAQ hasn't really been, we didn't think it was going to be as great as the other ones. And partly that is due partly because of Apple, which plays a big role in this particular fund, but the reality is it isn't a bull trend. Now, it's not going to be at the levels it was in 2000. It's about 36% below those levels, but it's still nonetheless in a bull trend. Moving to our next market, crude oil. Crude oil is really trying to etch out a base. You can see it's sort of making that little move. The technicals tend to say it's trying to make the move here, build up base. I think we may see more two-way action, but I think eventually we will go higher. And I think it's a combination of things that could occur. Europe obviously being one, 2, the problems with what's going to happen with Venezuela, their oil, and also some of the other things that just can take place. But generally speaking, every time we come back, we sort of fall back at a higher level. So we're in a trading range 92. The market needs to get over 92 to start looking really, get over 92 and close over 92 to start looking much, much better. But let's just clear the screen and put a couple of tools on here that we like to look at. One is these are on-chart tools, downtrend trade channels. There you go, out of the channel. And also our parabolic stop and reverse. Now, you can see that on that front, you've actually seen a turn in the parabolic. You've made the turn. You can see the level came down here, boom, moved over it. Very similar to this level here and this level here. So again, I think reality is we may have seen a bottom put in around the $89 a barrel level, and I think that's going to be the key thing right now. Let's just change the study down on the bottom. Very easy to do. Just go to your study menu, and we'll put a moving average convergence divergence right there, and you can see it's very, very close to making that cross right there. And let me just point that out to you. So these tools, the MACD right here, which is just very close to making it, and this parabolic are trending tools. Okay, they're not stochastics. or oscillators, I should say, they're more trending tools. So once you hit these levels, it would appear as though the market wants to go high. But we want to see it close over this red line. Just as we saw it close below the red line here, warning you that maybe there's some trouble ahead on the downside, and it proved to be very accurate. We may be seeing some turn here, much like we saw here and again here. So once you get the cross, and that's what you look for, the cross, you can get a nice trend up. So let's just see how things play out in the crude oil market. But generally speaking, there's some more positives, I think, than negatives in that market. But we want to see our trade triangles turn, certainly the intermediate term trend, which is the middle one right here, turn green. So let's go to our next market. This is gold. Gold has become like the most boring commodity, and that's a good thing. You don't sell quiet markets, and this has become very, very quiet. You can see we've just been going sideways, 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 and we sort of have the support around 1560. Now, if you go back any length of time, let me just show you what I mean by that. Let's just put a close only, and let's lose some of these very simple tools. Okay, so we go to close only, and we scope this out. You can see right around this 1550 level, that appears to be good value, certainly since 2012, last 15, 16 months, it's been a good value. Every time we've gotten down there, we've rallied, gotten down there, we've rallied. We're back here again. If it holds again, I think that's going to be a very, very good sign. And if we scope this out, just get a little bit closer in, you can see we have crossed over the MACD. Remember we talked about the line crossing over? That has crossed over. So let's go to our next market. And the market is the euro against the dollar. Now, this has sort of become again, a sort of platform. This 130 area is becoming a big number. We're flattening out here again. If we see this turn up, I think that's going to be a good sign. If you just look at where the turns were in this market based on the MACD, they came to be pretty good right here. So you scope this up here, and we're getting very close to making a turn here. So let's see what happens with this market on the upside. So let's just clear the screen again and go to our next market. So generally speaking, it looks like the dollar may have run its course. It's not over with yet, but certainly the trade triangles, the intermediate and the short term, are negative. So moving along to our next market. And this is our first pick for the day, Chesapeake Energy. Again, it gets back into this play, and you can see how we had a monthly that kicked in. And that's a good sign. 21.20, it's 21.48, so we earn the money there. And if you scope this out further, you've had some, obviously, some things happen to Chesapeake, but again, it would look as though you're sort of making this turn, very similar to the crude oil market, but this is a monthly that kicked in, and you have everything is a plus 100, which is interesting. If you look at this and look at Transocean, which is the other market we told you about last week, they are plus 100, meaning we're seeing this market make that turn. So let's watch that very carefully. The energy complex is going to be very, very interesting. This is First Niagara Financial, and we had a monthly kick in here. I wanted to share with you at $8.43. It's pretty much where it is right now, but it's trying to build up base. You've got a couple of things going for you here, which is really, I think, pretty positive. One is you've got this little double bottom, and if you see the market over here closing over this level, I would say that's probably the 850 level. If you close over there, I think you've got something going. You made a base, and you could probably go up to the 10 area, which is the previous level of resistance. So I think that's not a big play, but certainly it would be one to watch and make a little bit of money on. So let's just clear the screen and go to our next market. And the next market we're looking at is QEP Resources, symbol QEP. And you can see there's the monthly kicked in at 31.63. It's 31.68, pretty much where it is. So that would be the start of a trend. And it's caught some nice moves in the past, but I think you want to use, obviously, both our weekly and monthly for timing. So let's watch that carefully and see how that plays out. Now, this is Penn Growth for Energy. Again, another energy play, PGH. This is the first signal we've had on our monthly since we all the way back here a year ago, March of 2012 on the 5th. It's almost a year ago to the day, but that's saying the downward trend is actually over with. And look at the divergence now. Let me get this closer in if I can. I need 6 months. Okay. So here's the situation with the divergence. And let me show you how this works. So divergence is when the prices make new lows, and like here, for example, and the momentum does not go below the previous low. So here's the previous low right here, and here's this practical low. So the prices were going this way, but the momentum was telling you it was going this way, meaning there's probably going to be a change of trend, and that's exactly what happened. And you can see we've had a nice move up from this $4 range to $5.30. It's about a 25%, 28% move. So let's just clear the screen for a second, put our weeklies in, and I show you how powerful these weeklies are because they really do work. Boom, you can see we kicked in actually earlier at 464, and whereas this one kicked in at 530, so it's 533 now. So generally speaking, that's bullish divergence, indicating these prices can go higher. Now if we scope this out further, you'll see, and take some of these arrows off, you'll see we've been up as high as 14, and it would look as though right around this level, around the 4 to 5 level, is good support historically, and we could see this market go to 10, which is a nice move from where we are right now. So let's go back to here. That's the end of our little portfolio management today, and look at these yellow. They're all the yellow ones that kicked in today. There's one more. I said I promised to show you one more. I'm going to go back to the triangles. This is how you find winning trades on MarketClub. This is how I find them anyway. I go in here. I go to 2 million. I want to trade liquid stocks. I go to monthlies, and I'm going to search just today, and let's see what comes up. Well, the Bed Bath & Beyond came up today, weekly and a monthly. Let's go there. That could tell you the economy is getting better. People are feeling more comfortable, spending more money on stuff. That's what they have at Bed Bath & Beyond, is just stuff. So they're spending money there, so it's an indication that the economy is probably getting better. And there you go. There's the little turn and a little mini head and shoulders base. So it's capable, I think, probably going from up to here. I would say probably up to 65 at the very minimum. So we like that stock. Hey, I'm Adam Hewison for MarketClub. Thanks for stopping by. Every success in your trading today. I'll be back tomorrow.